Wasn't that long ago that a lot of people thought there was nothing but blue skies ahead for big banks? The worst was over after the horrible crisis that began with the collapse of Lehman Brothers in September 2008. However, people are starting to worry once again. While few think that we're going to have a return to those dark days of 2 years ago, there are legitimate worries about the health of big U.S. banks. What do you guys think, though, about the recent slump in big bank stocks? Shane Taylor said bank stocks have taken a beating because it is becoming clear that they've learned nothing from the past 2 years. They may well repeat their mistakes. However, that doesn't mean that the rest of the market has to suffer along with them. Bank stocks, as he pointed out, have done worse than the broader market since early to mid-April, when we had the highs for the year for the stock market. A lot of people I spoke to think that banks should continue to lag the broader market, even if the other areas like technology and healthcare, et cetera, start to pick up. And that's because big banks still have some big problems. And that gets us to our next reader. Janelle Pollard worries that the balance sheets of many banks are still stuffed with all those toxic assets. With all the bad loans on their books and REOs held, banks are certainly headed for more tough times ahead. Strategic defaults have become the option of choice for homeowners since most property values are now lower than mortgage principal balances. Helmets and seat belts are definitely in order. Another very good point there. Banks, many of them still have these really troubled real estate assets, and that could be a problem if the economy continues to lose momentum. Vito P. Zambri said banks are being pushed to stimulate the economy by lending, but those most in need have no resources to repay. That is a very big concern for banks right now. All of the bailouts were supposed to get banks to loosen up and start lending to consumers and small businesses again, but banks are understandably wary, and as long as they're going to keep credit tight, it's hard to imagine how the economy can really pick up steam. And if the economy doesn't really pick up steam, then banks are going to remain in trouble. But Matt Rivas has arguably the gloomiest outlook of all of our readers. Beating a dead horse is one thing, but trying to shock it back to life about a year after it's already dead is just, well, stupid. Welcome to the Fall of Rome, Chapter 2. Well, I hope that he is obviously wrong, but there are a lot of people out there worried that 2008 might be around the corner again, and it could actually be worse than the one that brought down Lehman and the rest of the financial sector.